It's Saturday, October 22nd, 2022. It's 10:43 a.m. on the East Coast. Again, this is Robert Sin at CEO Technician on Twitter, at Goldfinger on CO.ca. Again, if you enjoy these videos, if you get any value from them, please hit the like button and subscribe to my YouTube channel. Today I'm going to talk about junior mining just very briefly. I published this blog a few days ago, October 18th, the key to being a great speculator, position sizing. And so I'm going to leave you to read it if you like. But the main point is position sizing is so critical to our results as market participants, as investors, as traders, and especially in the junior mining sector in particular. Position sizing, getting it right and having some position sizing rules, some criteria is really important. Basically, I make the point that the sector is so volatile. And when it's rising, when these stocks are either making a new discovery or the gold price is surging hundreds of dollars an ounce in a few months, the rallies, the gains can be enormous. That your position size, frankly, doesn't need to be that large to still see outsized gains. I mean, for example, this stock was trading at about 20 cents over here. It rolls to 180, almost $2 a share. So that's, let's call it 10x in a few months, 3 or 4 months. So if you can have a 10x gain, if this holding over here is 10% of your portfolio and you hold it for a 10x appreciation, well, your account will double, right? That's a very big win, obviously. Here's one that even larger. I mean, this stock was trading under 10 cents and it went to almost $2 over the same time frame, right? So if it's 5% of your portfolio or 8% or 10%, if you see an appreciation like this, you're still going to have massive portfolio performance from it, right? The key is to not be focused on the good times when things are going up. The key is to actually be thinking about what could go wrong and how much we can lose when things don't go right. So we can have drops like this. I mean, this chart, the stock drops basically over 95% from its peak. This one, not quite as much, but still over 70%, right? So we have to be prepared for what could go wrong. And in the junior mining sector, 20 or 30% drops in share prices happen all the time. It's not unusual at all. So you have to be, when you enter a position, you literally need to be completely prepared that in the next week the stock that you just bought could drop another 20% or 30%. Literally, if you don't have that mindset, then you're setting yourself up for disappointment and for failure, right? And then if we're holding these stocks for several weeks or months, we really need to be prepared for 50, 60, even 70% drops because the sector is just that volatile. These are two charts, but you can go through any number of junior mining stock charts in the last few years, and the volatility is literally breathtaking. So dozens of stocks had 1,000% or more rises and 70% or more falls, right? So this is just par for the course in the junior mining sector. The key is really knowing when to size up the position. Let's say, if we're just interested in something, we're not really high conviction, might be a 2% or 3% allocation, but when do we want to really bring it to 5% or 8% or even 10% of our portfolio? And those should be the 10% positions should only be our highest conviction holdings, the ones where we really think that we have a rare insight into the potential upside that should be significant relative to the downside risk, which, if we're taking a 10% position, hopefully the downside risk should be 50% or less, right? if there's a realistic possibility the stock could drop more than 50% in the near term, then we should probably err on the side of caution, and so that we could buy more at lower prices if that if the stock price should drop, for whatever reason, right? So I gave three examples. These are basically best case of what could happen, showing stocks in accumulation channels, basically forming, a rectangle, accumulation pattern over several weeks or months, and then a big catalyst arose that drove them way higher, 10 or 15x higher, right? So this is a good blog post. I definitely invite you to have a read. Uh, and I think that if we are fully prepared for what could go wrong, and we ask ourselves these important questions before we take a position, then our position sizing and our choice of whether to buy or to wait will be better. We'll have more effective, uh, we'll make more effective choices as speculators, as investors in the junior mining sector. Most importantly, um, are all the stars aligning? The fundamentals, the technicals, the macro. Where are you getting your information from? If you're only getting your information from the management team of the company, and they are obviously inherently biased, are you being too optimistic in what could happen? Have you talked to any other investors that you respect? Have you drilled down on the data a bit deeper to try to understand what could go wrong, right? And then the macro. I mean, obviously, the macro is driving everything in 2022, right? So the macro that really affects the junior mining sector, well, the gold price is a big macro fundamental, and then financing availability, right? So in the junior mining sector, these companies need to raise money because they're not generating profit, or at least 99.9% of them aren't. Um, so how strong is this management team in terms of raising capital? What are the financial backers of this company, the largest shareholders? What's their exit strategy, right? These are all important questions. And then the technicals, the chart will very often inform us of what other market participants might be thinking, what they're positioned for, and it definitely, the technicals help engaging the risk versus the potential upside. So I want to talk about one stock in this video that's interesting because it's a story that I could update in the future when we get more data, more information from the company, and obviously more information in the form of the share price. So this is Go Metals, GOCO, GOCO on the CSE. This is one that has caught a lot of interest since September when the company put out this news. Gold metals, intersects wide intervals of nickel and copper sulfides. So there are a lot of core picks in this news. You can see this is pretty clearly some pretty nice drill core. Looks like massive sulfides to me. I'm not a geo, but looks pretty good. It looks like the kind of core that could grade 2%, nickel, 1% copper, or maybe even higher. But until we actually get the assays from the lab, we won't know. And that's the important thing. The big caveat, the big, disclaimer to put on all this is that we need to see the actual assays, and the core visuals are helpful. They definitely give us some information, but it's the assays that will really make or break the share price and this project that they're exploring, right? So if I look at just the chart, I see the big run up after the news as people speculated on how big of a discovery this could be. Is this discovery that's gonna set the world on fire and be something that could be worth $1 billion, or is this something much, much less, right? So you have the initial sort of sizzle after the company shows these core picks and gives some, descriptions of, you can see here, 21 meters of massive and semi-massive, another 175 meters that will probably grade much less, but could still be 0.3% or 0.4%, nickel. And certainly if this 175 meters does grade somewhere in the neighborhood of 0.4%, that would actually be very good news, in my opinion only. And the 21 meters, well, massive sulfides, we know we'd like to see it grade above 2%, nickel equivalent. Semi-massive, maybe 1% or 0.7%. We don't know, but this is just based upon a lot of other projects I've seen, and other companies that publish assays with these sort of descriptions, massive and semi-massive. Um, get a quote from the geo, we get a little drill plan map where the drill collars are, quote from the CEO, and then more core picks, right? So we have a little bit of information here. Not much, though. This is still extremely speculative. And until we see the assays, until we see more drilling, there's no way that we have enough information to actually confirm that this is a new discovery of economic merit. So the market is just trading on speculation. Every speculator has an opinion. Their opinion changes with the price action. People get more bullish when the price is higher. People get more bearish when the price is lower. But at the end of the day, who cares? Let's just look at the price. So we had this big run up. We've had an extended pullback as the market waits for assays. The longer the wait, usually the worse the news is. We know this as experienced junior mining investors. I would say that the wait at this point is a very normal, length of time. I think the company should have the first assays, within the next couple of weeks, although I don't know that for a fact. I'm just going on what the CEO said in a recent conversation he had that was published. Also reading comments on CO.ca. And so this will be interesting. This will be interesting to see how this plays out. But technically, it is in a channel. It's trading in a downtrending channel, but this is also something that could be construed as a bullish flag pattern. So you had the big run up, the flag pole, and now this is the flag. So right now, from a charting technical analysis standpoint, the bull flag is probably just about at its sweet spot, where if this is going to break out, it should probably do it in the next week. So the next 4 to 5 trading sessions, somewhere around here, it should move up. If this bull flag is going to complete to the upside, obviously also support around 50 cents is very important. There's a couple things about the 50-cent level. Well, it's the low, or 51 cents is the low of multiple recent trading sessions. It also was the low on these two candlesticks way back over here. And one thing I like about this chart is that price has held above the high of the first day, the day that the news was first announced, where it's consolidated above that high. So generally speaking, this is a bullish chart structure, but that doesn't mean that the chart knows what the assays are going to be, right? If the assays exceed expectations, then quite likely this is going to go higher, back above $1. Could even be much higher. I have no idea. If the assays disappoint, then this will break back down. Who knows? Maybe to 30 cents, 25 cents. Could even round trip all the way back to 10 cents if the assays really disappoint. Right. So there's a high degree of variance here, but Generally speaking, if we assume that the weight of the knowledge of all the market participants gives some insights into the future, this is a bullish chart setup. And especially the fact that this chart setup is happening in an otherwise dreary junior mining sector, environment, I would say this is a sign of relative strength that maybe this company is actually onto something. Full disclosure, I have a small long position in Go Metals, GOCO, as of last week, and I may choose to buy or sell at any time in the future, without notice. Um, I'm in it for a trade, so I may exit Monday, I may exit a year from now. I have no idea. That will depend upon a lot of information that we don't have right now. So please do your own due diligence. And if you got any value from this video, please hit the like button and subscribe to my channel. Thank you for your time and enjoy your weekend.